Welcome to this special program brought to you by my good friends at Old Mutual. In case you're seeing me for the first time, my name is Arthur Marara. If you've been following my programs, I think you know this is the type of programming that I want, everything financial literacy. I'm so interested to see you making wise and better decisions. But who do you walk with on such a journey? My good friends at Old Mutual, I'm so excited today. That's why I'm bringing to you a conversation that I believe is going to enrich you, is going to challenge you, and most importantly, is going to enable you to make better decisions. I think you've been following in the articles that we've been putting on various social media platforms. Today, we're talking about unit trusts. We've done a lot of these conversations, and I'm so excited that we're back again in the month of October and looking forward to the next one. But today, we're going to be talking on a very interesting subject, which is the equities market. And the question that we're asking is, should you stay put and should you flee? So if you want to stay put, okay, what does it mean? What are the repercussions? What are the pros? What are the cons? If you want to flee, obviously the question is, where do you want to flee to? Is fleeing actually an option? So I'm very excited to have my friends, and this is the first time we'll be meeting in the studio. COVID had done some wonderful, terrible things, and we could meet with this fine gentleman. So today I'm so excited that I'm joined in the studio by two fine gentlemen. We've had fun whilst we're doing this thing on Teams, but today we're so excited we're on set together. And I'm going to start by introducing my good friend, Mkoma Chenge. I didn't know you're this smart in person, Mkoma. I think Facebook, whatever, it distorts some of these things. Really good to see you. So Mkoma Chenge is a fund manager with Old Mutual, and my good friend as well, Tawanda Zuze. They're going to be helping us unpacking the subject and unpacking the conversation. So, gentlemen, we last did this conversation in June 2022. I think you know what it means. It means time Ruvamba. So between June up to now, the question becomes what has been happening on the market, and I think you're going to be coming in from the equity side. What has been happening? What are some of the developments?
Just to welcome the viewers, Arthur, and it's good to be live. Yeah. So what has been happening? Yeah. So if you look at our theme, we said flee or stay put.
Yep.
It means there's something that has been happening over the last 4 or 5 months that has resulted in us posing this question. So I would say there are basically two reasons why we are asking this question or why we are putting this proposition for discussion. The first reason I would probably give it as an illustration. You are on a journey. Then all of a sudden, during the journey, the bus sort of slows down, is having some challenges. And you are wondering, am I going to get to my destination? So you now ask yourself so many questions. Should I stay in this bus while the mechanics are sorting it out? Or should I look for alternative transport so that I complete my journey? But there are so many considerations to consider. Imagine if you have big luggage in the top of the bus. Surely you can't then ask for a lift for someone and they want their feet. So those are some of the considerations. This is why we are here. So if I am to take that illustration back to the stock market, if you look at 2020. The stock market had a return of 1,045%.
Wow.
2021 return was 311%. 2022 up to end of April, the stock market had a return of 162% in 4 months.
Wow.
So the stock market was cruising, and along the way, it was taking people on board.
All right.
It was taking people on board because we have exciting news. Things are happening on the stock market. Then post-April, things changed direction to southwards. Between April and August, the stock market lost 52%.
Wow.
So it meant your portfolio was now more than halved in 4 months. Yes, September, there was a bit of a recovery, another 8%. But if you look at 2022 as a whole now, the stock market, as of yesterday, had a return of 30%, 29.95%. Look at inflation, it's 220, currency movement much higher than that. So the question that people are asking is, should I be in this bus or should I leave?
Should I stay put?
Should I stay put?
Or should I leave?
Yes. So this is one of the main reasons why this conversation was triggered. The second one is probably the obvious reason that we always want to talk to our customers.
Yeah.
We've done this February. We did this in June.
Yep.
We are now doing this in October. We are consistent in trying to engage our clients, engage the customers, just for them to get to know what is happening. Because we don't want to come to the market when we have good news.
Yeah.
Even when we have bad news, like what is happening now in the market, there's need for us to talk to the customers. So I'd say those are the two main reasons to say, because of what has been happening over the last 4 months, how do you proceed from now? And also the general engagement that we have with the clients. So I would say those are mainly the two reasons why we are here and what has been happening in the stock market.
And I actually like the thrust where we give clients information.
Yeah.
The purpose of giving information is for you to be able to make an informed decision. So, okay, this is what's happening, and these are the options that are valuable for me. And remember the question, should you flee?
Yeah.
Should you stay put? And I think that's a very important approach coming from the group, where we're saying, okay, this is what's happening. These are actually your options. And now what I want to do, I think from this conversation, you say, okay, so what do we do from here? So you talk from the equities market, Todd. Let's talk about the money markets. Yep. I like the sound of money. What's been happening?
Well, it's been a roller coaster ride, I must say, Arthur. So lots have happened between June and now. And more specifically, a lot has happened within the policy space.
Okay.
Particularly monetary policy. So you understand a bit of background. As Chengi said, inflation is north of 200%, exchange rate had run away. So policymakers are trying to rein in these two key variables. Because from an investor's point of view, this is where your money is either made or lost.
Yeah.
You're comparing returns against inflation, against exchange rate movements. Yeah. So these policy measures have come up to rein in these two variables, and the resultant effect, net-wise, has been a drain on money supply, or liquidity more specifically. So the general talk in town is RTGS or Zim dollar risk kubatika.
I've heard that. So. In fact, I've experienced that.
You've experienced it. Yeah. So definitely Zim dollar risk kubatika. And as Chengi said, for some people that were invested in equities, they then decided to sell out.
All right.
To liquidate their positions and earn money. So fortunately or unfortunately, how things work or how policy works is every policy decision creates its own winners and losers.
Yep.
Where policy might have worked against equity investments, there's other asset classes that have actually benefited. More specifically, money market investments. I'll give an example where interest rates have been increased. The benchmark went up from 80% to 200%. And by interest rates, we're talking to the cost of money. So as much as it's now very expensive or much more expensive for someone to borrow funds, it's good news for whoever is lending money. That's where we come in. So we're saying from a money market perspective, we're going to earn much more returns if we are lending money.
All right.
And in the context of a unit trust, what happens is we pool money together. Fair enough, we know Zim dollar is kubatika. Imagine corporates, banks are struggling to harness Zim dollars. But I might have 1,000, Chengi might have 5,000, you might have 50,000. But there's no way I'm going to raise my hand and say, Ndine RTGS, Ndine Zim dollar, when I only have 1,000 or 5,000. With unit trust now, we're saying, let's come together. Let's pool our resources.
Yep.
You bring whatever you've got, the next person brings what they've got, we come up with one big pot. You entrust me with the funds. So that's where it gets interesting. Now we've got one big pot. We know banks need money. We know corporates need money.
All right.
Currently, I'll tell you the pot we are working with for money market investments is several billions. And this is individuals that have brought 1,000. The next individual is bringing in 5,000 per month. And now we've got billions that we manage. So now we have bargaining power.
The power of numbers.
Power of numbers. We have critical mass.
Yeah.
So we can negotiate good interest rates and we can share those returns amongst us as a collective investment scheme, as a unit trust. That's what's happened to money market. And I want to emphasize also, Arthur, between money market and equities, where Chengi said equities haven't been performing, money markets have performed on the inverse. These two are not competing. They are not competing against each other. The way we look at it as fund managers within Old Mutual Investment Group, we take them as complementing each other. It's a whole basket. It's a portfolio of investments. When one is underperforming, the next one is lifting you.
Yeah.
It's a portfolio. You might then need expert advice in terms of how much of this one should I have.
All right.
But they complement each other.
So you can actually have both.
Yeah.
Can have.
So you see, Arthur, if someone is listening to us for the first time, probably they would think maybe Chengen Tawanda are playing good cop, bad cop. But where I have sort of a bad story to talk about what is happening on the equities market. Yet Tawanda is a good story to talk about what is happening on the interest market, on the money market. That's what happens in investments. So this is why you need an expert. This is why you need Old Mutual to be able to assist you in how much you should probably allocate to this asset class and this to that other asset class. But that's generally how markets work.
Very, very, and I think the point that you're bringing out is a fundamental point on financial literacy. And I think we're talking about this before we even went live, about why we need to think beyond just saving. Because right now I was speaking to several people who actually have some form of money, either in USD, either RTGS, and they're holding on to it. But you can't actually create wealth just by saving only. You now need to start thinking in terms of investment. And how do you invest? I think we're going to talk about that later on in terms of the various options that are available in terms of investment. Then Chinga, back to you. From what you were saying from the equities market, can I be correct to say we experienced a form of a crash? I'm just a lawyer, guys. So can I be correct if I invoke that word?
Yeah, in a way, I would say you are quite right.
Okay.
Because putting numbers again into perspective, Arthur, post-April, May, the stock market was down 19%. June, down 14%. July, down 16%. August, down 17%. That would really fit the definition of a crash. So you are quite right in saying the money market is crashed. But now the question I think would be, what does this mean to an investor? It's not a question that you can answer in one line.
All right.
Our investors are in different categories. There's someone who is thinking about starting his or her journey. He's looking for a bus to take him to the next to his or her destination. So that person, when he looks at the stock market, he has a different view of the stock market. Then we have a second category of people who will say probably they bought their units at 40. Then the unit price went up to maybe 200. And then the unit price came down to about 150 because of this crash. That person is different from someone who invested maybe $100 in June, and that $100 is now 70 or 60. Because the one who invested 40, which went up to 200 and came down to 150, what has happened to his portfolio is that the unrealized gains have shrunk, but that person is still in profit because he bought at 40 and now it's 150, although it at one time went to 200. So we have these three different categories. For the first one, it's easy. If you are thinking of investing, then this is the perfect time. This is the perfect time. You are coming into the market when the market cap is 1.9 billion US. When you're talking about market cap, we're looking at the value of the Zimbabwe Stock Exchange as a whole. This market was at one point valued at close to 10 billion. But because of this crash now, it has come down to 1.9, 1.8 billion. So it's perfect time for you to enter if you are going into the stock market for the first time. So for that particular investor, it's a no-brainer. Take your money right now, talk to Old Mutual, go online, *227#, and you're good. You don't even need to come to the Old Mutual offices. So for someone who is doing it for the first time, go to your phone, *227#, and you're on.
Lovely. And we actually also have my Old Mutual app where you can also be able to transact. So your phone, that's how convenient it is. So those who are joining us for the first time, we are having conversations around the equities market. And the question we're asking is, should you stay put or should you flee? And the question that I want to answer for you, if you want to flee, where are you going to be fleeing? And I think we've just experienced some conversations around what has been happening in the market and what that means for you as an investor. And if you're a first-time investor as well, we're going to be discussing with you some of the valuable options that are available to you that you can also pursue. And the good news, we're going to be sharing with you as well some USD valuable options that you can contemplate as well in order for you to enhance your investments. Then back to you, Chenge. So I've read what you've said. So I'm going to be in devil's advocate. So you have told me about the ups and the downs. Now we're talking about a crash. The question becomes, is there any point in actually investing? And we're speaking to someone who is running their business as an SME, is saying, okay, I've heard what you've said. What's the point? Or is there any scope for investing? How do you respond to such a person?
Yeah, there is scope to invest, because remember, we earlier on talked about the different products, the different asset classes, and what they offer to different people. So there's always scope to invest. What you need to just assess with the help of an expert is to understand your objective, have a plan. What is your risk appetite? How much do you want to invest? What has been your experience with investments? Those are some of the key questions that you will need to look at. But at any given time, Tawanda talked about the market or the economy presenting winners and losers at any given time.
Yeah.
There are winners and there are losers. We are really talking about an opportunity, and it's like someone who is up a tree, and below there's a lion. When that branch you are holding on to starts to break, it's a problem for you.
Yeah.
But it's an opportunity for the lion that is down there.
Lunch.
The lion is looking at lunch.
It's even praying for lunch.
It's praying for lunch. It's on the prayer point.
Yeah.
So it's at any given time there are those opportunities. Yeah. So yes, there is need for someone to always explore. I don't know, Tawanda, maybe you.
Yeah, I think you sort of nailed it, Chenge. There's always an investment case, regardless of the case. So you'd find there's war in Ukraine, there might be famine elsewhere, but you need to understand what's required at any given time.
Yep.
You can't be selling ice cream and cake in a war zone. You can't be selling ice cream and cake in a drought-toward area. You need to know what's appropriate.
Yep.
So with investment, research is very critical. And I think that's then one of the key advantages of investing with an institution. I'll give an example from our end. We have a very strong research team, a whole team of investment analysts. These guys are there to think about what's likely to happen policy-wise, environment-wise, markets-wise. But if you're doing it alone as an individual, you might then miss those opportunities that Chenge is talking about. So it's critical to thoroughly understand the environment and then pick up the green shoots, regardless of how gray everything else might look. There's always green shoots somewhere. And then engage an investment house with investment professionals and analysts that can really direct you to where the money is. Yep. Ultimately, there's value everywhere. We can't overemphasize that point.
And I think the point that you're stressing, which is very important, is you don't necessarily have to know everything.
Yeah.
No. You simply need to know the people who know.
Yeah.
And what many people simply need to do is actually realize that you can set up a simple consultation. You say, this is the amount of money that I have. What are my options?
Yeah.
Which is what I think is something that's available to members of the public. And those who are watching us right now on Facebook, if you've got any questions, if you also want an Old Mutual consultant to reach out to you, please send your details on the comment section or even inbox. I'll be very happy to get back to you and also to explore to you and explain to you some of the valuable options that you can utilize in order to grow your money and grow your investment. So what I want us to do, gentlemen, I want to go back to the basics. Chenge, You have been talking a lot. Let me ask you. What I want us to do, Tant, let's go to the basics.
Yeah.
What are some of the key considerations that you need to take into account before contemplating investment? I think this is some of the things many people who want to invest for the first time will be asking right now.
Yeah. So going back to Chenge's earlier analogy about being on a bus or on a journey, I think it's very important that you define your investment objective.
Yep.
What's your destination? By what time should you be there?
Yeah.
So what time you need to be there also determines then your risk appetite and how aggressive you are. So objective is very key. Two, I would say risk. You need to understand the risks inherent. Whenever you talk of a potential return, then there must be a risk attached to it. Risk is very important, and I will try to categorize some of the risks. You find the first risk that you would experience as a potential investor is your own investor risk as an individual. There's the psychology of investors. You know, your mood could determine your aggressiveness, could determine your picking of assets and so forth. And fortunately there's measures to mitigate that investor risk, particularly psychology of investors. You can then engage third parties, an investment house. The second one with regards to risk is market risk. You can, again, mitigate it through engaging sort of experts and professionals, trained people. So we've spoken about objective, we've spoken about risk. I would say those are key considerations. And always, Arthur, you need to have someone that can handhold you. Like you said at some point, no one knows everything.
No one does.
No one knows everything. So we need then to walk this journey together. Let's walk together. I know something that you might not know. You probably know something that I don't know. But with our combined knowledge and experience and so forth, we can actually then ensure that we get to the end of that journey on time.
So true. Would you want to add anything else?
Yeah, maybe just to talk about the risks as well that are associated with the stock market. But Tawanda, I think, has said everything about the considerations. It's your objectives, your risk, your expected return, and things like that. So in terms of the risks, when you're looking at the equities market, there are so many risks, but probably we can narrow it down to maybe about 3 or so. The first one is the market risk that Tawanda talked about. Prices will always go up and go down.
And that's not within your control, by the way.
It's not within your control. Prices will always go up and go down. And how do you mitigate against that? We always say, when you are going for the equities market, always have a medium to long-term view. Because if you take a medium to long-term view, you are almost always guaranteed of winning. So take a 1 year, a 2 year, a 3 year perspective on your portfolio. You tend to win. So there is market risk. Then there is inflation, and there is liquidity risk. So when you look at liquidity risk, it's the way it operates is that Tawanda talked about the liquidity crunch that we faced in the middle part of this year. What it means is, when you have an asset and you want to dispose it, either you won't find a taker for your asset, or you will find a taker and you could janya price. So you're not able to realize the true value. That's how liquidity risk works. Because you Honda Fit cargo. You are valuing your Honda Fit at 3,000. What in the market, guys do things are Honda Fit. Must streets. Can I a liquidity problem? Either we take a choice. Can was it a desperate someone will say, even 1.5, So this is what now causes my markets to crash, because people are being forced to sell their shares because they want some liquidity. But the few buyers that are out there will say, we'll take us inspo. At what price? This price? No, I will not take it there. I will take it down here. So sometimes you are forced to do that. So there is liquidity risk that you may not be able to dispose, or you will be forced to dispose at a lower price. Then the element of inflation as well. Inflation, the way it works on the equities market is that when you are looking at your returns, on the equities market, they should be able to outperform inflation.
Yeah.
If at the beginning of the period, your money was able to buy 100 loaves, and you take that money for investment for a certain period, and at the end of the period, you are now buying 95 loaves, it means the investment has not been worthwhile. So those are some of the risks that you go back and say, paya, but now I'm not able to buy those things. It's your risk. So it's important. Tawanda has highlighted the issue of risk. It's quite important for people to understand risk. You know, Arthur, when the stock market was doing so well, we had so many people doing to my space, to my show, to panel, to my roadshow, because everything was going on well. But now, and everyone because it's possible that during that excitement, people did not understand what they were getting themselves into. What were the risks? What are the risks that they are going to face? But yeah, it's quite important for people to understand that objective, destination, and your risk.
And I think this is very important for everyone to take time to actually get to sit down with your consultant. He says, I'm putting my money here. What is it that I can expect? Well, that way, it will help you so that you don't experience any surprises. And I think summarizing investments, I think two words are number one, risk and return.
Indeed.
Okay. So what's the risk? Every investment, I think, is riskier in its form. And I think that's what everyone needs to also appreciate. But now, we're going to be looking, after the short break, into the various options that Old Mutual has for you in order for you to be able to make your investment. Remember the point that I've made, you can't save your way to wealth. So if you're saving $100, 10 years from now, if you don't invest it, it's going to remain $100. But if you give $100 into competent hands, experienced hands, and are aware of the risks that are available, you actually got an opportunity to actually grow your money. So how do you do that? We are going to come back after the short break. Then we're going to explore some of the valuable options that Old Mutual has. So don't go anywhere. Invite a friend. And if this is encouraging you and inspiring you, please share, like, and invite a friend as well to be part and parcel of this conversation. See you soon.
Ay, Mofu! Ngatani, Mofu! Kena lo lefine la polisi ngoba ngikuthini ngiyakusangaphi mina Mofu vuka mani!
Gabriel! Michael! Peter!
Wena! Gabriel, Peter ukuthini? Akuvuke lapha manje semsikeni. Khani Mofu njani kanti?
Kanti ingabe ngife ngabomo yini?
Mofu. Umuntu onganga ongela la funeral police.
Awuthi ngapfunga umfabela ku wardrobe.
Mina nto uyambona nje ngikhona la. Lo msika wami nje wona lo. Mina phela nilayo i-funeral police. I-flex e-Old Mutual. Ngikhuluma nje khathesi so. Sebevule ichapele phela nda.
Sure.
Phela khathesi wena Mofandi ungavuka ubhujelo. Kumbe wena nje ungavuka ubhubhile khona lapha. Yeye. Iyakuthi grocery.
Okay.
Ikuthi transport.
Alright.
Ithi imota yokuthwala umuyi. Lawe singakuthwala nje khona lapha.
Kodwa akunje mina ngingumufu nginje. Ngingayikwanisa futhi.
Hayi Mofu, athi mina nginje lami nginje ngikhona lapha ngilayo. Nxa ufuna phela siyahle sivale khathesi nje ngiyokutshengisa.
Hayi, asiqonde ku.
Madube. Ngicela ungikhangelele emsikeni wami lapha ngiyabuya khathesi. Akusukume hamba njengomuntu ongela funeral police odinga funeral police manje.
Kodwa uzingiphose ngafu yakwazi.
All right, welcome back. I hope you also got some time to breathe and also get to check out some of the products that Old Mutual does have, which can also help you in terms of achieving your financial goals. So just before we went for the short break, we were talking about risk. I think the colleagues here, they're saying they just wanted to add one or two things. I'll start with you, Tawanda.
Well, yeah, risk is primarily talking about uncertainty.
Yep.
And you'd find within these asset classes or possible investment houses we've got, they carry different levels of risk.
Yep.
And you'd find the riskier it is, the more aggressive and the more rewarding it can be. The more aggressive can be your losses as well on the other side.
All right.
So between money market investments and equities, which we are sort of zeroing in on, because we've got a whole catalog, we've also got, say, property and other sort of asset classes.
Yep.
But between equities and money market, you'd find money market is less risky.
Okay.
It's still a very good form of investment, but less risky. And when I say less risky, the concept with money markets is the return is based on your interest earned. So where we said earlier on, you might have invested 100 in equities,
Yep.
but then now it's maybe 70 or 80 gone down with market values. But with the money market, we're saying it's principal plus interest.
All right.
If you invest $100 in the money market, we are sort of saying on top of that 100, you are going to earn interest. There is no way, all things constant or working normally, you're going to give us 100 and then we'll come back to you with less than 100. And good thing is we'd have logged in the return on placement. When we then on lend this money, we're saying we're giving company X, bank X $100 at 10% interest. And by year end or after 12 months, we expect to have it back as $110. So that's less risky, sort of guaranteed return. On the other hand, with equities, anything goes.
Yeah.
You can wake up 10%.
Okay.
You can wake up down 17% in a month, like Chenge was saying. It's haphazard. That's how risk works within these asset classes. Higher risk, higher return. And I suppose there's also the common argument outside. Someone will say, no, I want much more aggressive returns. I won't take my money to an investment house because I can earn 10% in a week, what. Of course, that's possible. But remember, at the back of your head, you're also carrying a huge bag of risk on you. Yeah. The higher the potential return, the higher the risk is. Yeah.
Once again.
Yeah, nothing much really to add, but just to say, like what I want to say,
Yep.
people always talk about high risk,
High
high return, but probably they don't really put it into action and
Yep.
see what it means. So this is what it means. Like what I want to say, the equities market is higher risky. There's a higher risk than your money market. Yep. But when you look at the returns, I've shared with you the numbers.
Yeah.
2020, stock market went up by 1,045%.
Wow.
2021 went up by 311. Our products, our equity fund last year went up by 371%. Come 2022 now, the market has taken another direction. But if someone had put his money on the equities market, say in 2019, and they were looking at a 3-year horizon,
Yep.
what would have happened now is that their profit probably would have, their unrealized profit would have come down. But when they look at their real return over that period, they would have won. So the stock market tends to reward people who take a long-term perspective, medium to long-term, for you to counter these risks that we are talking about on the equities market.
All right. Yeah. I think we've sufficiently addressed the issues to do with the risk.
Yeah.
So I think we want to go to that portion where we're asking, and we promised our viewers that we're going to ask and look into the various investment options that are available at Old Mutual. I want to start from the money market side.
Okay. Yeah, from the money market side, again, we've already said across the risk appetite pockets, we've got different forms of underlying assets like equities, money market, property, and so forth. But you'd find within money markets as well, we've also got different pockets as well. So within money market, we can invest in diverse sort of assets, depending on how aggressive we feel we should go after assessing risk, we're going back to risk, after assessing the risk in the environment. So at some time we could say, no, let's be aggressive, let's go direct and lend to corporates.
All right.
Through corporate paper, and we can earn high returns. Or we could be very cautious and say, no, let's lend to government through treasury bills, treasury notes, because from an economic perspective or theory, it says government never gets broke. So if you are lending to someone who never gets broke, your risk is close to zero.
Okay.
But with less risk like that, you find the returns are also very low.
All right.
So we do have products that within money market that address all these variances for investor appetite risk. So if you are very cautious about risk, you can maybe take, say, a bond fund, long-term investment.
Okay.
Or investing in bonds, you're going long-term. It's possibly for money you want to use after a very long period of time. And again, as with all money, with all interest-bearing investments in our portfolio, it's still guaranteeing you that principal plus interest component. And then if you are short-term, like you could have excess funds where you're saying, I've got a bit of funds now, but I want to marry in December, for instance. I want some obligation to settle in December. I can't just leave money lying under my mattress for the next 2 or 3 months. You can then bring it into a short-term money market fund. So we've got bond funds, we've got money market funds.
All right.
Yep.
So I just want to hold you there. Are these available? Do we have USD options for this?
Brilliant, Arthur. We actually do have both USD and Zim dollar, and it's in line with how the economy is also structured. We now have USD and Zim dollars in circulation. So it's addressing the need. We know there's Mr. Dingi, Mrs. Dingi, who do have US dollars, and they're actually struggling. Say, where do we put this money? You see, nowadays, when someone earns a bit of money, they're always asking, Chichiru Badara. They say, no, we've got products to cater for your needs. We can house that money. We can take that risk away from you. Have a peaceful mind knowing the money is not under your mattress. It's housed with an investment house. It's also earning a return.
Yeah.
Back to your issue where you said, with saving, if it's under your pillow, it's just there.
It's going to remain the same amount.
Same amount.
Yeah.
We're saying we do have USD products to grow your money for you. So yeah, both USD and money market, as well as bond funds and money market funds within money market products.
And I think there's a very important point that you mentioned. Don't keep your money under a mattress. If you've been following the developments on the internet, you heard of a company that actually lost over $1 million cash.
Yep.
And I really want to believe that there should be more options available to them where they can actually remove the risk of actually keeping the cash without room for growth and put it in a place where that money can actually grow.
Yeah.
What would be your comment and what would be your encouragement to corporate individuals with monies under the mattresses?
Yeah, so remember we've already addressed the risk and return. We're saying advantage of bringing it to an investment house, we're taking the risk away from you. We are mitigating the risk. It can't be risk-free. We've already spoken about some of the risk inherent with some of our funds, but it's lower risk for you. You can at least sleep easy. And then 2, it's earning a return.
Yep.
So instead of keeping your money in a safe deposit or in a vault, we're growing it. Risk and return. 3, we all want aggregate economic growth and development. We all want improvement of our overall lives. How do we do that? If we say money is the lifeblood of an economy. So now if you've staged some of that lifeblood somewhere, how do you expect the economy to function then? We're saying instead of doing that and then whining about how things aren't developing and so forth, let's pull our funds together. You've got excess funds, fair enough, good for you. But let's combine those funds, bring it up. Let's then fund the business that needs those funds. Let's all contribute towards our growth. I'll tell you from a fund perspective, within our book, we fund almost all the banks, a whole lot of corporates are within our book. And it's impressive seeing that this company is performing well and we are contributing to that.
That's good.
Yeah, it's really satisfying, and we then need to come together. It might sound petty because you probably say I've only got 1,000. How am I contributing? But like I said, let's pull our funds together and ensure that we all grow.
A million people with $1,000. That's 100 million.
Imagine.
Yeah, that's a lot. I feel it's that's more than that. But so I think the moment people begin to realize the power in numbers, so your $100 can do more if we combine it. Your $1,000, your $10,000 can do more if we combine it. So you mentioned about bonds. What else did you talk about?
Well, I spoke about bonds.
Yes.
I also spoke about treasury bills, treasury bonds, treasury notes. Treasuries are when we lend to government.
All right.
And then bonds are just long-term investments, can be to government or corporates. There's also money market placements.
All right.
Money market now is where we lend to banks. Banks are in the business of lending money, but for them to lend money, they also need deposits. And so we can come together as a whole pool of depositors, put our money together, and then give it to the bank. Whereas ideally, you might earn a very small interest rate if you invest as an individual. If we then approach the bank with a big pot, we can negotiate for much higher rates. So we can lend to banks, that's money market placements. We can lend to corporates, that's corporate paper. We can go bonds in terms of duration, they are a longer term. We can do treasuries by lending to government.
Wow, exciting options. Let's go to the equities market. I heard someone is saying a lot of risk, a lot of money.
Yeah.
What are the options available? I know you talked about unit trust in the past. I think you might also want to explain on that as well.
Yeah. So in terms of our product offering as OMIG, under the unit trust section, we have 9 funds.
Okay.
Altogether, we have 9 funds. So I think Tawanda was talking about all these other products because you will notice that for those 9 funds, about 6 of them are money market based.
Yep.
So you have 1 equity fund, we have 1 balanced fund which invests. So the equity funds invest 100% on the stock market.
Yep.
Then there's a balanced fund which invests on a split between your equities and your money market. So this is for someone who is afraid of taking the full risk that the equities market gives, but at the same time feels the money market is not aggressive enough for his pace. So there is a hybrid fund which looks at a combination of your equities and your money market. Then we also have a property fund. I'm sure we talked about that in the February discussion. Then from those 3, the other 6 funds are what I was talking about, where 4 of them are Zim dollar denominated and 2 are USD denominated. So in the equity fund, if you are interested in exposure to the equities, we have 1 fund called the equity fund.
Okay.
In terms of performance, this year I was saying, as of yesterday, the stock market return was 30%. Our fund the performance has been in line with what has been happening in the environment, but the performance has been a bit higher than the all-share index because the return on our fund has been, as of yesterday, 47%. But last year, if you look at the benchmarks, we also outperformed the benchmark. 311 all-share index, 372 performance from our equity fund. So basically, those are the products that we have and the equity fund.
Okay. So there's a question here coming. I just want to read. It's coming from Terence Mgova saying, the stock market is really a zero-sum game. For every winner, there is a loser on the opposite side. Thank you for being across your reactions to that. Someone is saying, I don't see any winners.
No, I will go back to my analog of
the lion.
No, not the lion, but the bus.
Yeah.
Everyone must state their destinations.
Yeah, where do you want to go?
Where do you want to go?
Yep.
So this bus will go to Chivu. There are certain people who will drop from Chivu, and there are certain people who will come on board. But it doesn't really mean it's a zero-sum game because the one who wanted to go to Chivu, he has arrived.
In Chivu?
He has arrived in Chivu. So, pari kubuda ari kucreate space omwe munhu ari kupinda.
Yeah.
And ari kupinda ane journey yakewo, ane definition yake yema-objectives nekwaari kuda kuenda. Oenda saka ukati bhazi gozi kuramba rakangozara saka hapana benefit because bhazi rakangozara. Bhazi rikutodropa vanhu.
Asikumira.
Bhazi haritombomira. Bhazi rikutoti richitakura munhu richidropa because people are meeting their financial goals. So what is your plan? What is your objective? What is your destination? So if you look at, I go back to those numbers.
Yeah, the basics.
Take your 1.5, your 18 months, your 3-year view on the stock market and come back and say it's a zero-sum game. No, it can't be.
It can be.
It can't be a zero-sum game.
All right.
Yeah.
There's a compliment coming here. Is saying, thank you for the honesty. It means a lot in building trust. And I think there's feedback saying good response on being a safe place for some dry powder and so forth. Then there's a question coming in as well saying, how is the money market comparing with inflation? Are you yielding a real positive? I don't know what's written there, but I think you can answer the first part in terms of the money market comparing with inflation.
Yeah. So I would say specifically this year has been a year of two halves.
Yeah.
For the money market. So you'd find first half of the year, we were sort of struggling against inflation for several reasons. Where we said things like inflation were very aggressive, partly because, I mean, from an economics point of view, they say inflation is caused by excess money supply, chasing too few goods. So given such a situation where we're saying there's excess money in the market, it means the cost of money is low. Returns on the money market would be low then, in line with low interest rates. But then with these recent policy measures from, say, July thereabouts, higher interest rates means now we're performing. And also from a policymaker's point of view, interest rates have really come down. So from July up to now, we're talking of a period where inflation is going down, interest rates are going up, money market performance is going up. So if you look at us from, say, beginning of the year up to now, we are sort of more or less mirroring inflation. We've sort of now cancelled out the earlier losses. But I would say from July up to now, this small period, we've actually outperformed inflation quite significantly. I'll tell you that for September specifically, we had month-on-month inflation at 3.5%. But then our gross yield across all our money market funds was actually at 12%. That means we then had a real return above inflation, or return above inflation of 9%. So it's happy days now for money markets. We currently outperforming inflation.
That's good. So I've read the various products that you've mentioned. The question that many people are asking, I'm seeing from the inquiries, say, how can people access these products? The money market products, then I think will come to you on the equities.
Yep, these products are very, very accessible. Good thing now with the digital advancements and so forth, you really don't need to walk to our offices or queue anyway. Everything is digitally accessible, and the easiest form currently, even if you don't have a smartphone or internet, USSD *227#. You're in. You have the whole catalog of old mutual products. You say, I want investments, and within investments, I want unit trusts. Within unit trusts, you pick from a whole bouquet again. If you want equities, if you want money market funds. Okay, I need to stick to my lane. Money market funds. Yeah, so we're very accessible. *227#, my old mutual platform. And then if you want to be some real interface and have a proper chat with someone, you can still walk into any of our green zone sports or any of our local offices and have a proper conversation with a human about these products, money market products.
That's really great.
Yeah.
And I think Tawada has talked about my OM app. The goal really is to say, wherever you are, regardless of distance, you should not actually postpone making that decision, because you can access it from anywhere in the world. So you can download it on your Google Play Store or on the Apple Store and get to experience the amazing benefits and products that the application does have to offer. So you have no excuse. As long as you've got network in the battery, please dial that USSD. Battery, remember, battery. Even Kambuzi, battery. And Daipapo, Itajuzo. Yes, Zogora futhi USSD code.
*227#.
*227.
Yeah.
I don't need to cream foot. So go there.
Yeah. Further to that, the social media platforms.
Yep.
So we have a contact center team, which is just looking at with people who are dedicated to look at our social media platforms. So you can find your Old Mutual handle on Twitter, on Facebook, on LinkedIn, if you write something on any of those platforms,
Respond.
there will be someone either giving you a response or pointing you to where you can get full assistance in as far as that is concerned. So over and above, start 227 hash, my old mutual, just go to any social. So to be honest, Arthur, people don't have an excuse.
No, you don't.
Because go to your favorite social media platform. Old Mutual is there, and you can talk to us. And
everywhere. In fact, one of the things that I enjoyed about Old Mutual, the last time we did was it June or April?
June, yeah.
I was actually in Malawi, I think.
Yes.
Oh.
I just walked into caves, then I was able to be also very beautiful. Yeah. And what I really enjoyed was more people just coming through, sitting down, and hearing about the various investment options. I think we're going to repeat the point. You can't save your way to wealth, meaning you need to understand how to invest and what are the risks that are involved in investment. I'm going to back to you. No, I've been accused of talking a lot with you. I'm trying to balance here. But someone is asking on the equities, they want to invest on the equities market. What are some of the investment strategies that they need to consider? I understand this market is called a bear market. I don't know what it means. Also try to define what is meant by a bear market. Why not a lion market?
So people define this market as bear or bull.
All right.
Yeah. So if you say, the market is bullish, it means there is a higher tendency for that market to go up.
All right.
In a bear market, it's actually the opposite. The market is going down. So what we're experiencing now, I shared with you the numbers in terms of what has been happened after April and until today. So what are the strategies for someone? I earlier on I categorized people into 3 different categories.
Yeah.
So for the first one, for that person who is eager to go into the market for the first time, the strategy is buy and buy some more. This one is simple. But then for someone who is already in, and you have seen either your profit being coming down, or you have lost a bit of money over the last 4 months, what can you do? One, the simplest one is just play dead.
Play dead.
Play dead.
Yes, what if the undertakers come?
Play dead. The markets will sort themselves out. But what we want to discourage people from doing is to realize your loss. So you hear people talking about realized and unrealized. What we say is, if you buy something for $10 and the price comes down to $7, you are in a loss, but that loss is a paper loss.
All right.
It's an unrealized loss.
Okay.
But when you sell the asset for $7, you have actually realized the loss.
All right.
So as long as it's a price at $7, yes, you are in a loss, which is a paper loss, but that $7 can appreciate, probably go back to 10 and beyond. So we want to discourage people from realizing losses at this particular time. So one, like I indicated, just play dead, leave it, and the markets will sort themselves out. But secondly, if you have more funds, there are 2 things to do. One, you can go to your unit trust account, buy more units, because by buying units now lower, you are averaging the cost on your portfolio. So buy now, you are buying lower, you average the cost of your portfolio. Or if you have funds now, diversify.
All right.
So I'm not saying because you have lost money in the equities market, now stay away from the market. If the stock market is not doing too well and you are of the opinion that in the short to medium term it's not going to recover, diversify your portfolio. So the strategies are mainly, I just want to stick to these 2, where you can just leave your fund and the markets will sort themselves out, or diversify. Go to the money market portfolio. Tawanda, what do you have? What are you offering? Inflation at the moment is 3%. If you look at the movement in the exchange rates, it has almost remained at the same levels, but yet he's delivering. He has products that are giving us a return of 12%. Which is quite good. So those are some of the considerations or the strategies to take now, where you need to diversify or average your cost or just leave it.
Just lie
Dead.
Guys, you guys are very
I'm not promoting business for the funeral.
So what's the difference between lying dead and staying put? Is there any difference, or it's a matter of technicalities?
Yes, it's a technical. We are saying stay put.
Yeah. All right.
Stay put.
Dead mode. I like that. All right. So Tawanda, is it a good idea to invest in this environment?
In this environment, well, that's a good qualifier. There's always, like I said earlier on, there's always an investment case. So long you thoroughly understand the environment, so long you have clear objective goals, and then you need to try and marry that too.
All right.
You need to try and see where within the investment scope your objectives fit in.
All right.
So there is scope, there is definite scope, particularly with the right partner.
The right partner. Emphasis.
Emphasis.
Right partner.
With the right partner. There is massive opportunity. We understand these businesses requiring funding. We said we can do that. And when you say within this environment as well, there's many things we are trying to manage. Chenge spoke of inflation, exchange rate, and so forth. The good thing then with the right partner is the right partner can offer you a full bouquet of various options. And when you qualify that within this environment, I suppose one peculiar thing about our environment is it's very dynamic. So within a very dynamic environment, you need a partner who can offer you scope to move across, to be able to be switching your strategies. So when the environment detects, you can find yourself within equities. And we were saying equities has been coming off a bit. You then don't need, lying dead is a very good strategy for long-term investors.
All right.
But remember, we also said there are people that might have found themselves in equities for the wrong reasons. Imagine you just heard equities is performing, this is like in March or so, you probably had a small pot of deposits, you threw it all in there. Yet you wanted to use it, say, sometime next year. Now, imari yekunorora, and every day you check price movements. You see urukubembwa every day. Urukubembwa. I mean, you're attracting problems for yourself. But with the right partner, now you're seeing this is happening. There's carnage on the markets. You can actually diversify.
What do we need to do?
As you put it. You see, I already have a problem with flee, where we're saying flee or stay put. Flee sounds panic-laden. We were saying don't flee.
Flee away too.
Don't flee, don't panic. You need the level of composure, and then you can say, okay, equities is not performing, but I have a clear objective, I need to spend this money next year. Why not then move it from equities to money market, for instance? I'm defending some value. So the short answer, Arthur, is yes, there is massive scope for investments. Let's just help each other to find where the green pockets are, and let's move together.
That's great. Check it.
Yeah, I think it's along the same lines. Don't panic. Reduce the amount of noise around you so that you make a good decision. We are always there as Old Mutual to help people make better decisions. If you need human interaction, we are always there to talk. So in as far as that question of fleeing or staying put, when you decide to flee, the question is, where are you fleeing to? We are saying we have 9 unit trust products. If you need to flee from this one, look at the other 8. What do they offer? I'm sure from those other 8,
something.
So if you decide to flee from this one, let's talk. Let's look at the other 8. The next one, if it's not meeting your objective, we look at that. That is why we have this wide range of product offering to our investors. So so to respond to your question, Arthur, I would say let's stay put, play dead,
Play dead. I love that.
Play dead. Let's diversify.
Yeah.
But in terms of diversifying, you need to understand how much do I need to put on the equities, how much do I need to put on the money market.
Yeah.
Then we talk. We have a team that can help you make that decision and so on.
Well, gentlemen, our theme was flee or stay put.
Yes.
Ultimately, everyone who's watching us right now is saying, okay, we've heard what you've said. What's your advice? So what is your advice to investors right now?
Yep. So to investors, fleeing is never a good idea. Fleeing just doesn't sound right. For starters, it just doesn't. For instance, you don't hear, when we make investment decisions, we don't say we fled from this asset class and we investing. You don't say Warren Buffett is fled from. So I've learned over years how people tend to lose money through investments. There's several common denominators: panic and greed.
And the excitement.
Excitement, yeah. Over-excitement, panic, greed. When we make investment decisions, we always want to try and filter those out. Level of composure is very necessary. So, don't flee. We have a whole catalog of possible alternatives for you. Make a rational, informed, calm, calculated decision. That's what I would say. And you then also find, for those that might find it necessary to exit is the right word. For those that find it necessary to exit or to disinvest, let's do it in the right way. And let's continue investing, but within maybe a different pocket. Yeah.
Chenge, this will be your final words as well. What would be your advice to investors?
Yeah, so the advice is, Tawanda said it quite correctly, fleeing is not
an option.
Is not an option. Let's take this opportunity to also buy low and average the cost of our investment. Let's take this opportunity to also diversify our portfolios. So I would say those are my short parting words. I know in the previous discussions, Arthur, I've been accused of talking too much, but today...
Not today, you're not very technical. No, I like you're very kind.
Yeah. So for me, parting words is don't flee.
Yep.
Make informed decisions.
That's good.
Take advantage of these low prices to buy low, and also let's diversify.
That's really great. Gentlemen, ladies, I don't know where you're watching us from, but I hope this has been a 1 hour well invested, where you got to learn, got to be inspired, and get to see what's happening on the market and also explore the various options that are available for you. Should you stay put? Should you flee? And I think you've heard it. Fleeing is never an option. Why? Because you might actually be going into the fire. So rather, like what Chenge says, stay dead. Wait, you'll be fine. We won't bury you. We'll resurrect you. So stay dead. Be patient a bit. Everything that's to do with investment, there's always an element of risk. But most importantly, sit down with a consultant and learn the available risks and also the returns that's available, and also the products that are meant to help you achieve your goals. We all have different goals. So ensure that you come up with products that are custom made in order for you to be able to achieve your financial goals. And the good news, as we mentioned earlier, there are USD products. For those who don't want to invest in the local currency, there are USD products that you can actually explore. And secondly, there is also a digital platform where you can actually get to take advantage of these products. There's My OM app, which you can access on Android or the Apple Store. Kanaone Mbudzi, you are also in. So take advantage of the various options that we have. We hope this conversation has also encouraged you to make a decision. If you have not yet invested, we want to challenge you. Now, I was talking to Chenge. He was saying if you want to be part and parcel of the unit trust, he said how much was it? 5,000?
5,000
Zim dollars, just the starting point.
So it's also $100
$100.
USD.
Yes, for USD, $100. So imagine what you can do the moment you just discipline yourself to part with just $5,000. So you might not be able to do much with $5,000, but remember what Tawanda said, the moment you put that amount of money, you pull it together with other people and you put it into competent hands together we can do so much. And like what Old Mutual says, do great things every day. And I'm challenging you to also make it a commitment to doing great things almost every day. See you next time, very soon before the year ends.
Thank you.